ZS lost 13.03% in the session of yesterday, the 26th of November 2025, on above average volume of 9.823 million shares, which is like more than six times its average volume. And given that loss of 13.03%, it's now trading at a discount to its volume weighted average price. Volatility is expected to dampen somewhat. Okay, so the company's earnings outcomes didn't impress the broader market. Let's see what's going on.
Zscaler is catching heat this week, and not the good kind. Even though the company posted an across the board beat, strong revenue, solid EPS, textbook execution, the stock got hammered because the FY26 outlook didn't match the sky high expectations baked into its premium valuation. Investors basically said, cool numbers, but that's it? The fiscal Q1 2026 print checked all the fundamental boxes. Revenue at 788.11 million, up 25.5% year over year, beating estimates by about 2%. Non-GAAP EPS at 90 cents, also a clean beat. Demand signals still robust, especially across cloud native security, zero trust adoption, and enterprise expansion cycles. But the hangup is guidance. Management projected 797 to 800 million in next quarter revenue. Respectable growth, but not the blowout acceleration bulls were hoping for in a cybersecurity market where winners are expected to crush rather than coast. On top of that, the company logged a $36.4 million operating loss, a reminder that Zscaler is still investing aggressively and not yet consistently converting scale into bottom line leverage. That disconnect between performance and expectations triggered a sharp sell off in pre market and persisted through early trading on November 26th as traders and long term holders alike recalibrated their multiples. When a high multiple stock delivers good but not incredible, Wall Street can get a little grumpy. Inside the community, sentiment split. The bull's argument: this is a gift. Momentum oriented investors see this drop as a classic overreaction fueled by guidance sensitivity. They point to sector wide volatility, suggesting that cybersecurity names are getting unfairly punished despite structural tailwinds. Bullish voices also highlight strong customer wins, durable demand for zero trust architectures, and Zscaler's deep enterprise footprint. Some analysts were already characterizing the post earnings dip as an attractive entry point, especially for long term growth portfolios. The bear's counterpoint: the modest guidance raise is seen as a sign Zscaler may be growing increasingly reliant on newer, less proven product lines to maintain its trajectory. Competitors like Palo Alto and CrowdStrike have stepped up innovation, raising concerns about market share battles and slower upsell cycles. Persistent operating losses make some investors uneasy, especially in a market where profitable growth is back in style. The valuation has always been rich, and some traders are framing this moment as a necessary re rating rather than a buying opportunity. Bigger picture: sector ripples. Cybersecurity is still one of the market's most resilient themes, but the reaction to Zscaler has spilled over into broader cloud security sentiment. Some analysts are warning that we may see similar scrutiny applied across the space as investors demand faster operating leverage and clearer paths to sustained profitability. Others argue that volatility in high growth tech is exactly where institutions scoop up positions quietly, especially in names with long term secular demand.
Okay, yeah. Before now, the underlying trend, or rather, the stock had been contracting. The expansion that it had been on since all the way back. I would say all the way back in September. It had been, yeah, it started to contract that expansion as of the 13th, as of the 12th of November. Okay, so today's, or rather yesterday's disclosure of its earnings even worsened it. So lower prices are expected to keep printing up till Friday, the close of tomorrow's trading session, and then after that, it might attempt to bounce but may be rejected. So it's more of volatility, more of more, I would say, more of a distributive, ultimately a distributive, yes, more of a decline. Yeah, more of a decline. More of a decline is expected to continue to play out, especially after attempting to recover by the 3rd of December. Projections are currently saying, let's see what we have. 256.36. It's still at a discount to its average weighted price. All the others are currently downward projections to 40.27, 230.34. It has a pivotal projection here of 290.36. If it closes above it, then we have the chance of it retesting 293.71. Statistically, that probability is just slightly below 50%. After that, the next will be 296.85. Let's see, yeah, 296.85, and maybe towards 301.55. No guarantee that will be the case. Momentum is expected to continue to decay, going all the way towards the close, going all the way towards the pre-market session of tomorrow, the 20, no, sorry, going all the way towards the pre-market session on Monday, the 1st of December. Then in that session is expected to pick up, validating this bounce that it has here been extrapolated. These extrapolations are not guaranteed to happen. On its daily chart, the line trend still remains strongly bullish, and lower prices are expected to keep printing. The same contraction of the expansion that began in actually late August is expected to continue, but not with the same trajectory that it had as of Tuesday. It began yesterday. Not with the same trajectory from yesterday, the 20. Not with the same trajectory from yesterday, the 26th. So, but still today downside today, but still still to the downside. Yes, so lower prices expected to keep printing, but in moderation towards the 8th of January. The 40-day moving average is expected to serve as a resistance. Let's see now. Pivotal projection here is 297.11. Okay, that's a premium to its volume weighted average price of 257. And let's see now. The probability of it retesting to 89.65 is very high, statistically very high. Yeah, given that it's the moving average we are considering here, the 10-day moving average in this case is greater than um, the target of 290.14. Yeah, yeah, and equally as well, the much closer 275.17 equally has a very high probability of being retested, but it doesn't mean it's going to happen. We tend to see this when stocks are contracting an expansion. We tend to see um, probabilities of them rebounding or retesting previous highs are looking very high, but it doesn't always follow. It doesn't always follow that it will retest it. Yeah. If you consider the probability of it retesting 336, for instance, it is statistically very small, very small. So it is that paradox that plays out. The odds of it retesting, or yeah, the odds of it printing new highs is obviously, as you can easily imagine, very tiny. But they still go ahead and do so. The odds of it retesting previous highs that it printed a couple of hours ago, look very high. But if you expect them to retest them in the same few hours, it wouldn't happen. That's the paradox that uh, manifests when you have cases like this when you see stocks contracting expansions. The price pressure momentum indicator is saying that momentum is going to pick up from Friday the 28th, and is expected to remain strong up till the 26th of December. Okay. Yeah, so by it's saying here that it may cross over its 10-day moving average by Tuesday the 2nd. Okay, what could possibly happen? Okay, well, we know that moving average will continue to drop, and it's dropping. Let's see now how it's dropping. It seems it's dropping by 2.2 points every day. It seems, yeah, yeah, by 2.2 points every day. Yeah, or maybe it may catch up. Okay, well, yeah, it may catch up. It may catch up with it. It may catch up with the 10-day moving average. Yeah, it may catch up with the stock itself will catch up with the 10-day moving average possibly by the second of December. No guarantee that will be the case. But we have a contradiction. We have a divergence here. Lower prices are expected to keep printing, and momentum is expected to build up. So we'll see how that aligns, how that manifests by then. Okay, so see what you make of Zscaler, ZS stock, and thank you very much for watching this video.